Let's talk about 5 things you should know before you start investing in crowdlending. And if you're already investing, don't miss this because you might have forgotten some of them, and it's always good to review. Before we begin, subscribe to the channel so you don't miss more videos like this one. Let's get started. 1. What is crowdlending? The first thing you should know before starting to invest in crowdlending is understanding how it works. Although I won't go into detail here, I'll leave a video above for you to watch. Basically, in crowdlending, you lend money to a person or company along with many others. Typically, a loan isn't funded solely by one person, but with money from many people. Hence the name crowd, meaning multitude in English. Many people come together to lend to a person or company, but we don't do it directly. There's an intermediary company that issues the loan. This company attracts clients, develops the risk policy, and grants the loan. In some cases, the loan issuer is also the platform that attracts investors and acts as an intermediary. However, in many cases, there's an independent company that serves as the lending platform. On this platform, we can invest, viewing loans from different originators or just one originator. An example is the Mintos platform, where investors can invest in loans from different originators who operate in various countries with different risk policies. Other platforms, like many in real estate, attract investors and issue loans themselves. They study the loans and provide the money that investors contribute. I'll leave a more detailed video above where you can learn more about crowdlending. 2. Investment returns. The second thing we should know before starting to invest is the return we'll get. The return you see on platforms is expressed annually, meaning it's the return you could achieve in 1 year. For example, if you see a 1-month loan with an 11% return, that doesn't mean you'll earn 11% in 1 month. It means that if the loan lasted 12 months, you'd earn 11%. If the loan lasts just 1 month, you'll get a proportional part of that 11%. Although the return is annualized, the interest is usually received monthly. Sometimes you might even see daily returns or on specific days of the month, as we invest in loans that start on different dates. In some cases, especially in real estate or business crowdlending, the interest isn't received monthly, but at the end of the project. Before investing, it's essential to know when you'll receive the interest and capital. In summary, the percentage you see is annualized, the interest is received monthly, and you might receive periodic interest almost every day. The third thing you should know before starting to invest in crowdlending is that you can lose money. This isn't a bank account, it's an investment. And like any investment, it has risks. There's a possibility of losing money, whether because the borrower doesn't repay or the platform encounters issues. Some platforms offer a buyback guarantee, where if the borrower doesn't repay, the originator buys the loan. However, this guarantee doesn't always work. There's also the risk that the platform might have problems and be unable to return the money. Even if a platform is regulated, it doesn't mean your money is 100% guaranteed. Investing in crowdlending involves risks that we must assume. It's important to stay informed and diversify our investments to mitigate these risks. Another thing you should know is the liquidity in this type of investment. The liquidity might not be what you expected. For example, if you invest in a 1-month loan, your money might not be available at the end of that month. The borrower could delay payment, affecting the availability of your money. Additionally, if the loan has a buyback guarantee, you might have to wait an extra 60 days before getting your money back. In some cases, loans can be extended even further, delaying the recovery of your investment. In the case of loans with mortgage guarantees, the process can take months due to negotiations and legal procedures. Although it's possible to receive the money on time, this doesn't always happen. Crowdlending investment shouldn't be considered short-term, but rather long-term. Some platforms offer immediate or almost immediate liquidity, like Bondora, Monofit or Mintos, but with certain conditions. Finally, some platforms offer welcome bonuses for new investors. If you sign up through a specific link, which I'll leave in the description, you might get a bonus ranging from €5 to a percentage of what you invest in the first few months. These bonuses can be a nice way to start investing with a bit more money or to make your initial investment more profitable. But be aware that these bonuses might come with conditions, such as needing to keep your money invested for a certain period. Be sure to read the terms and conditions carefully before investing. These are the 5 things you should know before you start investing in crowdlending. If you found this video useful, don't forget to give it a thumbs up and subscribe to the channel. Also, leave a comment if you have any questions and I'll be happy to help. See you in the next video.